Now, you can look at a lot of different charts. I'm going to try to highlight a couple here this morning. If you go right to the wood on the CRB Index, so when you think about reflation, you think about the commodity reflation that we saw. Obviously, we saw a massive deflation that started to reflate. The trend is your friend still. You'd still have to break like 186 on the CRB Index to break what I call trend, but the trade is broken. So medium-term trade resistance is 192, so that's why I have a little red line there. That broke, so you got bearish trade, bullish trend. That's reflation. That's the new setup. Now, when that happens, you have to ask yourself, is it just a counter-trend correction? That's what something that breaks medium-term trade momentum does, but is still bullish trend. Or is it the beginning of reflation becoming deflation? I mean, that would be a very bad thing. We don't have that in the cards. But again, we do have, Josephine, if you can go to slide, I think, 25 in the current macro theme deck. Macro theme number 2, don't forget, at Hedgeye, is that we are identifying a peak potentially in terms of the reflation theme. So that's what we call it, hashtag reflation's peak. We have not minced words about this. We've also, if you roll through the next couple slides here, Josephine, on that, the reason why we think that it could be peaking is because this current quarter, you're comparing against the easiest comparisons of the deflation. So again, you go back only a couple years ago and you see the deflation when oil was down there on the rocks and the negativity of it all. Now you're going to have oil up over 60% year over year. You have gasoline up over 32%, copper up over 26%. So again, the inflation numbers are going to be super hot for the next 3 months. And the way that we effectively front run that from a modeling perspective or tell you that inflation is going to be higher than what the Fed thought, Josephine, if you go to slide 28 in that slide deck, some of you have seen this already before, which is, of course, that we build a front runner for the data. So again, the front runner, which is our proprietary signal, is the black line. It's already gone to 4.5%, 5% on what year-over-year CPI, for example, inflation readings. The gray line, which is, of course, now 2.5% CPI, could easily go into the high 2s, low 3s. So that's what inflation is going to do on a reported basis. The question is, has the market already priced it in? I think it's a very good question. I actually think that it's something that you should debate with me. I'll debate with you back because I don't know what the answer is. Markets have an uncanny ability to discount the future, don't forget. And again, if they've priced in the highs for Russia, the highs in the CRB Index, the highs for oil, that's possible. You know, again, I hope those of you that know me well know that I have absolutely no problem turning everything I like or have liked the other way. I have no problem with that. So again, I'll listen to the market. I respect the market. I have a genuine disrespect for old wall media, but I respect Mr. Market. Oh yeah.